Hello, ladies and gentlemen, and welcome back with Canadian Silver Surfer, the one, the only, the top dog in the silver industry, here up here in the Great White North in Canada. Kuru kuku kuku kuku, kuru kuku kuku kuku. Hey, how's it going, eh? Well, thank you for joining me, boys and girls, ladies and gentlemen. It's been quite a bumpy ride in the last few days. Silver has come down a little under $30 an ounce. Right now it's sitting at $29.95 bid or $30.05 ask. So right about $30, give or take. And in Canada is $40.98 bid and $41.12 ask. I'll be putting out a couple of videos today. One of them I'd like to get into right now very quickly and tell you what's going on in the Middle East. President of Turkey, Erdogan, has been spewing out a lot of garbage against Israel, saying that Israel is going to attack Turkey once it's finished with Gaza. That's a farce. Now he's calling for an Islamic alliance against Israel, an Islamic assault alliance against Israel. He says that Israel is a threat to the world, and he even called Benjamin Netanyahu a vampire. Now, I knew this was coming because the Lord declares the end from the beginning and the beginning from the end. I'm not in darkness like most people are. I live in the light of the world. Yeshua Mashiach Sikenu. Yeah, that's on one front. Here's some new. I'm showing my Teenage Mutant Ninja Turtles number right here with Cerebus, and number 45 here with Leatherhead. Some great new acquisitions. I'll show you some silver. Here we got some Britannias. There's Royal Bull Mint, the best precious metals dealer there is in town and across the nation, ladies and gentlemen. Right there, Royal Bull Mint. There's a Britannia. Here's a Johnson Matthey. Here's a 1989 Royal Canadian Mint Maple Leaf in the original seal. Here we have a Bitcoin, silver Bitcoin. Very nice. 3 Silver Eagles, 2024. They're hard to find because Costco bought them all. Here we have a 2024 Copper Libertad. Very nice. Proof colored coin. Look at that. Isn't that beautiful? I'm proud and honored to have it. This is known as Grandma's old watch she gave me many years ago, and I'm watching the time ticking down to the end, coming to the end of civilization here. We also have a couple of Liberty bars. In the original seal. This does no justice. Let me show you here. Very nice. Show you the reverse of the Britannia. So I'd like to talk about, after talking about Erdogan, the monster. Give me a second. Give me a second. I hope I didn't. Give me a minute. Give me a second. I just had the article and now I seem to have misplaced it. It's gotta be here. Here it is. From Kitco. Came out May 24th. Fed will cut 5 times this year, driving gold to $3,000 by H1 2025. Kitco News: the current pullback in gold prices is very temporary as the Federal Reserve will deliver multiple rate cuts, which will propel gold prices to $3,000 in the next 12 months. According to Max Slayton, global head of Citigroup Commodities Research, in an interview with Bloomberg TV earlier on Friday, Layton was asked how focused his team is on the role of the dollar in metals markets, including the potential impact of the interest rate path. Layton said, "We certainly think about that. The House view is quite out of consensus. Citi Research House views we've got 5 Fed cuts this year, lowering rates into the end of the year, early next year, and that's certainly going to be, we think, the backbone of the next move higher in gold." Citibank, ladies and gentlemen. Layton said Citi believes gold is the asset most leveraged to that kind of move in interest rates. We've got it going to 3,000 over the next 12 months, he said. We asked about the market only fully pricing in one rate cut this year and where that would leave gold prices. Layton acknowledges this would necessarily rein in the projections. Certainly would make us less bullish, he said, but the underlying drivers of gold are very physical at the moment, so we feel like there's support for these gold prices. Obviously, gold's broken the relationship with real rates of late, and that's been all about the colossal Chinese retail demand. I mean, off the charts. Excuse me, ladies and gentlemen. I've never seen China on the bid of the highs in the dollar national that they're putting into the gold. We ballpark it's roughly 40% of what we have otherwise gone into what would have otherwise gone into property. He added, "It's a big shift from property spending into gold and retail in China. It mopped up about 2/3 of China's mine supply in the last 3 or 4 months, really absorbing all the mine supply. That's plus the central bank demand, and there's nothing left for the jewelry market." Asked whether the city says the outsized Chinese demand continues at current levels, Layton said this was the most worrisome unknown in their view. "This is the biggest downside risk to gold for us," he said. And unfortunately, ultimately, the government controls the quotas on the imports. The quotas aren't published, and they could dry up if the government becomes unhappy with the transfer of wealth from perhaps consumption and retail into physical gold. Retail, Layton added that despite gold's strong performance year to date, attention he's been seeing all the commodity space been going to another metal. I would say overall the action is commodities has been almost 95 to 99% copper, he said. From a client activity perspective, from what I hear about and see, it's not so much been in the gold moving forward. However, Layton expects that interest will shift toward the yellow metal. "I think there's a lot of room for gold," he said. "Frankly, many people, including ourselves, were scratching our heads as to what the new drivers were, and now they become clear that it's China. I think it's going to get a lot more interest in gold because people can get their heads around it." In April, Citi updated their gold price forecast to $3,000 per ounce by 2025, making them among the most bullish in the industry. In the summer of 2019, I was in the studios calling for $2,000 an ounce as a base case over the next 12 months. Akash Doshi, Citi North America head of commodities research, said during an interview with Yahoo Finance on April 16. Now he thinks that $3,000 an ounce is in play over the next year or so. Dashi said investor demand is the big driver that will make this come to pass. We think financial demand for gold is catching up to what is strong physical demand, he said, referring to reports of burgeoning bar and coin sales. "This is a global trend we've seen for in coin demand surging since the pandemic. It's now above pre-COVID trend that we think represents a strong alternative to flat demand story." Separately, we see the official sector, central bank, and the emerging markets in the particular to buy a record amount of gold over the next several years. over the last several years, including over 1,000 tons in 2024, which would be the third highest since 1967. He said, "We think this physical demand is structural. It is strong. It is driven by a host of factors, and financial demand for gold is only catching up to that." I would note that there is a U.S. recession, which is not priced by markets right now. That could also be a further kick towards $3,000 an ounce over the next 12 months, Joshi added. So there you have it, ladies and gentlemen. Citibank foretelling $3,000 an ounce gold this year by 2025. And they're admitting that America is in a recession. Go figure. Thank you, Biden. So there's a lot to chew on there, ladies and gentlemen. There's a lot to chew on. Give me a second. And today in Canada, Yahoo Finance, Wall Street braces for more Bank of Canada rate cuts, loony weakens. Bloomberg, Wall Street is gearing up for a weaker loonie and a series of interest rate cuts from the Bank of Canada as after it became the first group of 7 central banks to ease monetary policy this cycle. The Canadian dollar slid against the greenback to its lowest mark since May 23rd, hitting 1.3741 per US dollar. After the Bank of Canada on Wednesday lowered benchmarks board costs by 25 basis points to 4.75%. The yield on benchmark Canadian 2-year government debt fell more than 10 basis points to 3.95% as of 1 p.m. In Ottawa, extending a gap to the U.S. Treasury counterparts. The decision was all around more dovish than we would have expected, and the bar for cutting rates again soon does not seem nearly as high as we have thought before today's comments, wrote Veronica Clark, an economist at Citigroup Inc. Again, Citigroup, ladies and gentlemen. After the decision, Citi now expects quarter-point interest rates cuts from the Bank of Canada at each additional meeting this year, in part because weakness in U.S. data should have spillover effects. The message is pretty clear. Bank of Canada Governor Tiff Macklem said in a press conference after the decision, "We're going to be taking our interest rate decisions one meeting at a time. If the economy continues to evolve broadly as we have had expected, we will continue to see inflation pressures easing. It is reasonable to expect that there will be further cuts in interest rates." Here's what others at Wall Street are saying. Claire Fan, economist at Royal Bank of Canada. The rate cut today from the Bank of Canada makes the first step of easing cycle, which interest rates are lowered back toward normal levels, and spells good news for Canadian households that have been contending with elevated borrowing. Tiffany Wilding, economic at Pacific Investment Management, said, "The path of Federal Reserve policy and overall U.S. economic strength will become increasingly important if the Fed cuts if the Fed cuts once or less this year, as the divergence between interest rates and the U.S. and Canada will likely reach 100 basis points in the fourth quarter, adding additional pressure on inflation due to the depreciating Canadian dollar." So there you have it, ladies and gentlemen. Canada lowers interest rates, and it will have it's one of the first of the central banks to lower the interest rates. So there's a lot going on, ladies and gentlemen. I love Silver Dave's from Local Silver Mint video last week when he was talking about the CBDC and how they're going to try to put a chip in us, and if they're projecting 12 to 24 months from now, which means really they're going to do it in maybe 8 months from now. So get your candles, get your lighters, get your bread, your rice, your pasta, your sauces. Get what you can to hold on and bunker down, because we don't know what's coming, ladies and gentlemen. Is this the mark of the beast? What's going on? Is the rapture about to happen? Is the great snatching away about to happen, ladies and gentlemen? The great disappearance of the saints and of the children of God. I want to thank you for coming to join me today. This is Canadian Silver Surfer saying, look out.